starting a growth series. This is the first kickoff workshop for that to really help small businesses. At the end of this workshop, we're going to give you a very short 5-question survey. If you have needs as a small business that you feel we could in some way help you with or create a workshop for you, please don't ever hesitate to give us a call or email me. I have my cards here. I'd be more than happy to talk about it with you and see if there are other businesses that have the same needs. Today we're going to talk a little bit about small business practices and some tax things, just because that's been one that has been requested pretty regularly lately. Things are changing in our economy, so we want to make sure that everybody gets maybe some information that they may not be able to afford to go out and get regularly. So if you have questions, I know Mark's going to do a little question and answer session. Feel free to have snacks, and at the end I'll pass out the survey. Thank you so much for coming.
Hey, good morning.
Good morning.
Thank you guys. I'm Mark Foster. I'm a CPA with Harvey, Neal and Company here in Danville, and we're just going to talk a little bit about small business issues. I kind of want this to be a roundtable type thing. You guys are going to get real bored if I stand up here and just talk to you. So jump right in. If you have questions, please jump in. I'll be happy to try to answer them. If I can't answer the questions, I will certainly try to point you in the right direction. We'll do the important stuff first. This is a little bit about me. Born and raised here in Danville. I graduated from Tunstall High School in 1986, graduated from Virginia Tech with a Bachelor's of Science in Accounting in 1990. I immediately went to work for Harvey, Neal and Company and have been there ever since. I became a partner in 1999 to now, and hopefully I will continue to do that. Just a little side note, I'm also the treasurer of the chamber, so I think that's how I got hooked into doing this. What I'd like to do real quick is just kind of go around the room, find out. I know there's a lot of friendly faces here. I know a lot of you guys. But just tell me this information about your business. Give me your name. Tell me what you do. How long you've been in business. I'm going to try to, the presentation I have prepared kind of is startup type businesses. So if nobody here is really a startup, we might kind of blow through some of that stuff and get to other topics. But tell me what you're doing good, and tell me what your problems are. Tell me what keeps you up at night. Looks like we'll start right here.
Okay. Good morning, everyone. My name is White. I am a new business owner of Work Consulting. The VET is for veterans, underrepresented and underserved populations. And the work is for continuous employment. So that's basically what Work Consulting is about. We do education support, including programming. We do research and development, and we also focus on vocational rehabilitation. Like I said, it started in September, and I'm really happy to be serving in my home community. I've been back just since March of this year and have been at Danville Community College, but now I'm stepping out on my own 2 feet to hopefully better the community here locally. My success story is I started in September, and I've been able to secure 2 contracts, so I've been going pretty strong with work, which is always positive. And what keeps me awake at night is securing more contracts to continue to keep working.
Very good. Jeffrey? All right. Okay. So that's our main purpose for being here. What type of entity are you guys?
We are a C.
Yeah.
Yeah, C
C Corporation? Okay. All right.
Good morning, everyone. My name is Virginia. I am an independent distributor for Herbalife. I don't know if any of you guys heard about that company. My success history is that since I started this program, I was 188 pounds. I lost 51 pounds doing it. I love it. I want to help what keeps me busy or what keeps me at night thinking about it is how can I help people to the same way that someone helped me when I was that big and I was that feeling that bad. So I feel great, I feel good, and I want to help the community and let them know that I am here.
Very good.
Hello, my name is Lakeisha DeShaver. I am the owner of a boutique called Divine Boutique. I have been open since April. And what I sell is, I cater to women, but it's a good thing for the men because they come there and tell me a little about their, the woman in their life, and I kind of go off of their information. We sell handbags, we sell scarves, we sell brooches, watches. I also create baskets and gifts where we incorporate all of those things together in their favorite color or whatever. Success stories, I would say getting a call and shipping items to Las Vegas, Philadelphia, New Jersey, and last week, Maryland. So those to me are successes because people have heard about me and we just started in Danville. So some things that keep me up at night, customers, being innovative, making sure that I stay on top of the latest and trying to be the best that I can be. That would be it. Thank you.
Are you selling on the internet?
Working on that now.
Okay.
I do have a Facebook page. That's how people from Las Vegas and different people have heard about me and they have contacted me. So I do ship, but I'm trying to work on getting a website up now.
Okay. What type of entity are you? Are you incorporated, LLC?
No.
Sole proprietor?
Yes.
All right.
I'm wearing one of her products right now, Lakeisha. This is a belt that I bought from Divine Boutique. I wanted to point it out. Go get something that's lovely stuff.
Success story, right?
Yeah, that's a success story. I have a day
Good morning. My name is Crystal Pives. I run Kingdom Kids Child Care with my husband. We're an in-home child care company. We provide. What makes us different is we're flexible. We try and work with parents who are in retail. Their children stay there. We have children that are in our home until maybe 9:30 at night. So we really try and work with parents. We also do date nights, so that parents have errands to run on the weekends, hair appointments, things like that. They can bring their children to us. We've been in business. We're limited liability, and we've been in business for over a year. That would be our success story. We're still going, working with your husband every day. With kids in your home that can be challenging, and what keeps us up at night is working towards opening a child care center. So we have bigger dreams and goals that we're working towards.
Very good. Jane?
I'm Jan Quinn. My husband and I own Quick Properties LLC. We handle rentals. We own 60 apartments and 15 houses. Our success story is most of the time we have a 98 to a 99% full. We hardly ever have any vacancies. My goal's always been that we don't own anything, that I would live in myself. And when somebody moves in, it's move-in ready as if I was moving into it myself. And I think that's why we've been so successful. We've been doing this for about 25 years.
James?
I'm James Barkhauser, from Barkhauser, Fort Lincoln. As an S-Corp, we've been around for quite a while, but my wife and I also have some small businesses. We have some income property and LLCs. My wife, a couple of years ago, we started a C Corp. She's a consulting. She has a consulting business. She has clients across the country, mainly pharmaceutical. I guess our success stories, we've been able to hang around for 55 years in Danville.
Good answer there.
Tax laws.
Just curious, why'd you do the C Corp with the result of that?
Because we can control the income to the point that we can stay under the 15%.
Right.
And spreads. We actually have another C Corp too, and we sort of delegate different activities to spread the income out, try to stay under 50,000 each net.
I got you. Okay.
I'm Sylvia Josie. I own Your Stuff and Kids Stuff Design Boutique. I'm sole proprietorship. Celebrating 20 years of business this year. My success stories is my business has put 3 kids through college. The baby graduates this Friday from his bachelor's degree. What keeps me awake at night is if I die first, what my husband's going to do with the business.
I understand that. Right, Eddie?
I'm Eddie Cassett of Piedmont Glass. We're an S Corp. Come February, we will have been in business 60 years. Our success story, I believe, is I feel very fortunate that we have survived the last 5 years. And I try not to let Piedmont Glass keep me awake at night at all.
Mr. Gilley?
I'm Jimmy Gilley. I'm the Commissioner of Revenue for the City of Danville. We assess businesses, personal property, business license. We just want to hear what Mark has to say today. How long I've been in business? I've been in the office for 26 years. The Commissioner's office has been in existence since 1787, I believe, or 88. We started assessing citizens in the Commonwealth during the Revolutionary War. That's where it started. And what keeps me up at night, my success stories, I don't have any. And I don't sleep. So.
I'm David Giffen, and I work for Mr. Gilley as a compliance review person. We come in and visit with businesses to help them comply to the tax records, tax laws. We review records. We also advise, willing to help if people have questions and how to properly maintain the records.
We're going to touch on some of those issues later. Bruce?
My name is Bruce Hicks, and I also work for Mr. Gilley. And as far as Mr. Giffen, ditto.
All right. Well, that's good. We've got a big variety of experience, and we've got a lot of startups. It looks like over on this side. The experienced guys are over on this side. I don't know how that worked, but it did. We're going to run through these pretty quick. Most of you have already started the business, so this, may be a little remedial for you, but, step one, develop the business plan. Jeffrey Bond, I'm going to probably call on you a few times here because I know you're going through this sort of thing right now. Number two, utilize the resources that are around here. We've got the Office of Economic Development, Small Business Association, the Launch Place. Call on your professionals that you know, your insurance guys, your bankers, your attorneys, local trade associations, and your local government officials. They're sitting right back there in the back row. Pick your location. Obviously, that's important. Capitalize the business. You got to have money to start the business. That's just the way it goes, and you need lots of it. There's always unexpected expenses. Probably the most important thing is your choice of legal entity. We have some sole proprietorships here. We have limited liability companies, which is probably the most popular right now. You can go with S corporations, C corporations, and nonprofits. There are a few nonprofits signed up. I don't think any of them are here. We'll cover each type briefly a little bit later, but that is one of your most important choices. You've got to register your business with your state corporation commission or secretary of state, whatever state you're in. You've got to get your federal ID numbers, your state withholding numbers, employment numbers, you name it. Obtain your local business licenses and permits. And another big one is understand your employer responsibilities if you have employees. They are a nightmare. Choice of entity, sole proprietor, that's your simplest one. You just say, I'm opening up shop, I'm going to get a bank account, and I'm going to sell my wares. No paperwork's filed anywhere. You should still register with your local offices to get a trade name or whatnot. The limited liability company is very nice. It affords you some legal protection in the case of legal liability. And if you're a one-person ownership, it's really treated just like a sole proprietor. If there are two or more of you, you're treated as a partnership by default. You can elect to be taxed as S corporation. And what we're seeing a lot of people do now, it's much simpler to form a limited liability company. If you want to be taxed as an S, you can elect to be taxed as an S at a later point in time. Two people forming a business together is automatically a partnership unless you elect otherwise. There's a regular corporation, you issue stock, the corporation is its own entity, it pays tax on its profits. When you distribute money out to the owners, it's taxed again to the owners. Usually not a good thing, but if you can leave the money in there, it's okay. S corporations, that's a pass-through entity. Corporation has its income, its expenses. The bottom line is passed out to the shareholders. If you and I are in business together, half of it's yours, half of it's mine. We pay tax on half. And then there's nonprofits. I know next to nothing about them. And none of those guys are here, so we'll skip right by those. This is what most of you need to know. Record keeping and bookkeeping. Do not commingle your funds. I know these guys have seen it. I've seen it a million times. I'm going through my clients' books and I see checks to Food Line, checks to, to Uncle Bob, you name it. It's the worst thing in the world to do. Keep your business money separate from your personal money. Establish a separate checking account for your business. I even suggest getting a credit card solely for your business. And just keep it separate. It's much cleaner, it's much easier that way in the long run. Utilize accounting software that's out there. I mean, I recommend QuickBooks or Peachtree. They're the two most popular. There's a few others. MYOB is a decent program, but QuickBooks is everywhere. Everybody knows how to use it. It's easy to get help. I suggest use it. If you're not proficient at bookkeeping and accounting, get somebody that is. It's going to pay off for you in the long run. If your records are not good, you have no idea how your business is performing. There's just no way to know. And believe me, I see a lot of clients that could not tell you if they had a good year or a bad year. They're like, well, I got money in the bank. That doesn't necessarily mean you're having a good year or a bad year. Utilize software and technology for everything. Use it for data storage. Some of you may be big enough to need servers, that sort of thing. Cloud computing, but keep up with the technology. This is pretty important. Document your owners' meetings, whether you're stockholders' meetings, members, partners, whatever kind of meeting you're having, document it and keep minutes. If you're a corporation or S corporation, you're required to. And keep, your various important documents, loan agreements, organization papers, legal agreements, deeds, whatever you have. Keep it in a nice, safe place and keep a copy of it electronically. Make a PDF of those things so you can always find them when you need them. Another good piece of advice for small businesses, especially startups, establish relationships with the local people around you, your lawyers, accountants, bankers, insurance, financial advisors. Talk to your peers. If you've got a buddy that works for a similar type business, talk to them. Find out what they're doing. Small Business Administration is a good resource. Launch Plays, Economic Development, Chamber of Commerce is an excellent resource, especially for networking. There's no easier way to network with people in this community than to show up at a chamber event. They're all there. Everybody you want to talk to is there. Your local government officials, again, back in the back row, and your elected officials. I mean, you can always get the ear of your representatives, and that's a good thing to do if you've got a major problem. And check out your trade associations. They're always there to help. understand your local incentives. We have enterprise zones in and around the Danville area. If you go buy a building and decide you want to make major improvements, there are some grants and credits out there available. If you work in the enterprise zone and you hire X number of people, I think it's 4. You guys know that? 3? There are credits available for that. If you go downtown and buy a historic building and want to turn it into your office, there are rehab credits available. Small employer health insurance credits, you claim those on your entity's tax return. And it amounts to up to 35% of the health insurance premiums that you pay for your employees if you cover health insurance for your employees. But by the time you shake it out and boil it out, the credit really doesn't amount to much, but it sounds nice. Understand fixed asset acquisitions. This is a pretty big deal, and this is where most of my businesses do their planning. We're going to cover these in detail a little bit later. But Section 179 expensing and bonus, they're very, very important items of depreciation. This is a good one, too, if you have employees. I know some of you do, some of you don't. But know your wage and hour rules. Understand employee benefits. You know, make sure your retirement plans are set up and documented properly. If you're paying health insurance, understand Obamacare or the Affordable Care Act. If you provide employee autos, understand how to do all that stuff. It's complicated. It's not easy, and we're not going to get into covering the details, but what I kind of want to do here is get you guys asking the right questions to your advisors. And understand employee taxes, FICA, Medicare, federal and state withholding, unemployment, you name it. It's a lot of stuff to have an employee and run a business. Understand your federal and state tax reporting requirements. You got to do tax returns every year unless you're a single member LLC or a sole proprietor. Single member LLCs and sole proprietors are reported generally on Schedule C if it's an operating entity, on Schedule E if it's a rental activity. If you have employees, here's more stuff. Quarterly payrolls, annual payrolls, it's a lot of paperwork. And you have to prepare annual reports for the State Corporation Commission, and you have to pay annual fees for your entity. These guys can tell you about sales and use tax and meals tax rules. Make sure you know that. Annual business licenses and fees. That's these guys again. And your property tax reports. Do those right, too. That's always a good idea. I have clients that try to do them themselves, and I show them what it would look like if we did it, and usually they're nothing alike. We talked about this earlier, if you're an S corporation or a corporation, document your meetings, keep records, make sure your bylaws, stock books, operating agreements, buy-sell agreements are all up to date. It's important. Everybody needs to know what happens if something happens to your partner or another shareholder. And it's always good to have it on paper. It makes it clean and easy. This is what we need to think about for the year end coming up. Section 179. Right now, you can write off up to $500,000 of equipment purchases in the year of purchase, assuming you buy $2 million or less in total fixed assets for the year. And I'm pretty sure that's going to cover everybody in here. Next year, you will be able to write off $25,000 worth unless Congress acts. I can't imagine Congress not extending this, but there's a lot of dysfunction there now, and who knows? Same thing with bonus depreciation. This applies to new equipment only. You can write off up to 50% of the cost of a new fixed asset, and you depreciate the remainder. There's no limits, but this is set to go away at the end of 2013. If this goes away and Section 179 gets reduced, it's just going to be bad for business owners that have to invest in fixed assets. So hopefully those two items will be extended. There are brand new final repair and capitalization regs that take effect in 2014. I think they came out last week. And it simply provides guidance on whether you expense an item or whether you have to capitalize it. And it's long. It's a huge document. The bottom line, if you buy a piece of equipment that you use in your business that you think will benefit you for more than 1 year, it needs to be capitalized and depreciated. Or you take Section 179 or you take bonus. You know, if you go paint a wall, then that's a repair. But there again, it's significant rules and regulations out there now. It's dollar limits, you name it. It's very complicated. It's a nightmare. 15-year recovery for leasehold and retail improvements and property, restaurant property. This expires in 2013. If I'm leasing a building from James and I make some improvements, right now I can write that off over 15 years. Once this expires, that's 39-year property. It's going to take you 39 years to write off a new wall. So that's a good thing if it's extended. And the bad thing also about these extenders is we won't know until February. I mean, it makes it very difficult to plan for anybody because we don't know what the rules are going to be. But yet the rules take place in December. So it's you know, in a way it's unfair. It's unfair to the taxpayers, but that's just the way it is. Work Opportunity Tax Credit expires December 31st. And if you look at this thing targets families receiving certain government benefits, individuals receiving supplemental Social Security, and veterans. I mean, how in the world can you let something like that expire? But it's slated to expire. The credit is 40% of the first $6,000 in wages, typically. And there you can read the other stuff. So hopefully that'll get extended too, but it is set to expire. There's a research tax credit that I'm not very familiar with, but it's expiring in 2013. Small business stock gain exclusion is also going to expire. If you start a C Corp after September 27, 2010 and before January 1st, 2014, this thing goes big, Amazon decides to buy you, there's no gain on the sale of your stock if you've held that stock for over 5 years. No taxable gain. That's a big deal. Although it generally doesn't happen, but it could. And built-in gains tax goes from 5 years back to 10. It was 10 years for a long time. Built-in gains in a nutshell, if you're a regular corporation, you convert to a C, and your assets are worth a lot more than they're on the books for. There's what's called a built-in gain there. Up through 2013, if you held that for 5 years, that built-in gain tax goes away. Well, now it's 10 years. So, and that's either a good or bad thing. If you're planning on selling your business, it's a bad thing. If you're making a bunch of money, you've got tax problems coming up, big time. There's new tax brackets. Personal exemptions are going to begin to be phased out. Itemized deductions are being limited. The increased tax on long-term capital gains has gone from 15 to 20% for high-income earners. There's a net investment income surtax of 3.8% that high-income earners will pay on interest, dividends, capital gains, passive income. Additional Medicare tax. If you've got significant income, you need to do some tax planning, real big time. The Affordable Care Act. I don't think we have anybody with more than 50 employees. I talked to James yesterday. You were close, but not quite. If you have over 50 employees, you've got a problem here too. If you're providing health insurance to your employees, you've got a problem in that your premiums have probably increased. Just my guess. talk to your insurance guy about this. But this is going to create significant challenges to employers. That's the end. These are some pretty decent little websites that you can go to for small business information. The first one is my company's website. We've got some newsletters. We've got some tax tools out there to help you plan certain things. IRS, Small Business Administration, Virginia Department of Tax, Virginia State Corporation Commission, North Carolina Department of Revenue, Secretary of State for the North Carolina, City of Danville's website, Pennsylvania County's website, and you've got some articles in your little books there, and a lot of them came from this little website right here. This is pretty neat. It's sponsored by the American Institute of Certified Public Accountants, and it's got some really good financial newsletters and tools and that sort of thing. All right, that's my little speech. Now, let's try to answer some questions, if anybody has some. This is going to be a quick one. 250,000 or above joint. A lot of these things kick in. Most of them kick in at 40. Yeah. Well, some of them's taxable, some of them's just gross. But I mean, I would say if you're making over 150 grand, you need to be thinking, because it's some things out there that bite you.
Talk a little bit about, I know LLC sometimes, if there's a partnership, when they take the call.
Right.
Sometimes that can be a little hairy, if it's not a 50-50 partnership, or can you talk a little bit about withdrawal paying yourself as an individual?
Oh, okay, yeah. Well, if let's just say you and I are 50-50 in an LLC. We make 50 grand this year. We can simply take whatever's available in the checking account. We're welcome to take it because we're going to pay tax on that 50. No matter if we pull out 20 or if we pull out 75 each, we're still going to pay tax on what the net income of the entity is. So, and it's as simple as writing yourself a check. There's no reporting requirements, there's no 1099s to complete. Unlike a regular corporation, take a distribution out of a regular corporation, you've got to give yourself a 1099 to report the dividends. And there again, that's a bad form of double taxation.
Unless you can leave.
Yeah, unless you can leave it. And that's the key, you know, if you're starting up a business and you're trying to grow it, I mean, I like C corporations. If you can afford to leave the money in there. But, you know, most business people are trying to get the money out. That's their goal, is to just take everything they can get out of that company, out of the company. And S corporation is the same way. Whatever's in the checking account, you're free to take it. Because you know, you're going to pay tax on the money one way or the other. One thing I meant to talk about on S corporations is understanding for the owner, more than 2% shareholder. If you're in an S corporation and you're paying the owner's health insurance, that health insurance has to be added to his W-2. And then he claims a deduction on his or her tax return to deduct that health insurance. It's kind of crazy. If you really read how that thing works, it makes sense, but it seems like you're chasing your tail around a little bit. You add it to the W-2, deduct it on the corporate return. The shareholder reports it as income on his W-2 and then deducts the premium. So that's kind of messy. And if you're an S corporation and you're profitable, you need to be paying the owners a wage. You need to give the owners a W-2. If that thing's profitable and the owner's active in the business, it's got to get a W-2. A lot of S corp owners don't like to do that simply because they feel like they're paying Social Security tax when they could avoid it. But as you can imagine, the IRS wants to get their taxes. It's all over the place. I mean, technically, what we advise people to do is what would it take to do what you do? What would you have to pay somebody to do what you do for that business? We have guys that refuse to do it.
There are cases out there, pay yourself something, you generally get by with it, unless it's just way out of hand. I mean, realistically, again, it depends on what you do for the company. If you're the entire company, you're the rainmaker, and you do all the pushing the pencils and whatnot, then you need to pay a significant salary. But court cases out there are pretty friendly, actually. We know zero is not good, though. Zero is not good.
What some people don't realize, when you don't pay that salary, you don't pay that Social Security, when you retire, that's when you're gonna, because you're gonna get less Social Security income when you retire. So that's a bad side of that.
Yeah. I've got clients that
I've seen people that when they retire, that's all I get. You took that money in dividends, and you didn't pay tax on it, then you don't get this retirement income.
That is an issue. I've got clients that refuse to pay themselves over $5,000 a year, and I tell them every year, you got to do more. I'm not gonna do it. All right, man. This will work fine until the IRS comes. Did I answer your question? Anybody else got anything?
As a consultant, I have sub-consultants, and they might work on one project, and this could be one workshop. And I know under tax law, if you make less than $400, and for some of them, it's an hour workshop, they might get $100.